So what's going on, everybody? Hope you can hear me. Give some more time for some people to come through. So what we're going to do really quick is go to Miss Phoenix 91. Hope everything's going well for you. Let me go ahead and share my screen out real quick. Am I already sharing it out? Okay, that's my fault. Okay, so we good to go. And so what we're going to talk about today is recession fears. It's the best time to sell insurance, right? So big up to Jay Preston. What's going on to Ori? So Ori, man, appreciate the $4.99 super chat. What's going on from VA? I got family to go to school out there. And David, what's going on from Toronto? I think my admin might be in Toronto. She might be. She in Canada somewhere, right? Going to school. What's going on to Julian Brown? So it's been a crazy morning in the market. That's why I want to kind of come on impromptu show. Just decided just to do it. It's been a really wild morning in the market. So I give you a heads up. I probably got out of almost every put I had in my account, and I'm gonna kind of tell you why I did it. So I pretty much got out of almost every put I had in my account this morning, right? And the reason why I did it is because I just felt like, based on what the market was showing me, it was probably the best time to get out, right? And I had a lot more theta on the puts. I mean, I had some puts didn't expire until probably January 2025, right? Which means I got almost, let's say, 5 months on them. But what the market was showing me from a profitability standpoint, it probably made sense to get out today. And then I could look to probably get in at a later time, as we get ready to go deeper into the year, right? If I still have that same narrative on that particular stock. So all I pretty much spent this morning doing was exiting out of a lot of plays, right? And so that's what I kind of want to talk about today. So what's one of the reasons why the market's been crazy the past, I would say, since the FOMC meeting. We saw the FOMC meeting on Wednesday. As the meeting closed out, the market got very, very bullish, right? Then we saw on Thursday, the market was relatively bullish, like the first, I would say, maybe hour. Then the market sold off really, really aggressively, right? The market was also bullish earlier this week. Then what we saw today was some numbers came out, and I was looking at the pre-market. Looking for me, I woke up early. So that's one of the things I tell people about traders. Is being a trader will kind of discipline you, because you often want to get up before the market opens if you're going to kind of look at the market in the opening session. So normally what I try to do in the morning is look at the market from 9:30 to 10:30 minimum, sometimes 11 o'clock, right? Because I want to kind of see what's going on with the market. But what I normally try to do is I'm trying to be up by 7:30, right? And so what that requires sometimes is that you got to really discipline yourself. You can't be out drinking. You can't be out smoking. You can't be out doing those things that's going to impact your ability to get up in the morning with a clear head. So when I woke up this morning, looking for me, I woke up early. I looked at the pre-market and futures was down, right? And futures was down like a lot. And so I'm like, what's going on? And I realized that I had missed the employment numbers coming out, right? So some employment data had dropped. And as a result, the market took that the wrong way. So let's go to this jobs report, right? We got an increase in payrolls, right? They revised last payrolls down, but we saw the unemployment number go up from 4.3 to 4.1 month to month, right? So that's a big jump from 1 month to another month. And so what we're seeing is unemployment is starting to come in line with low-key, almost pre-pandemic numbers. Not quite there, but it's getting there. Now, the market is taking this, and really what this sell-off that we're seeing today, it's done with algos. And I was talking to one of the people that took my course earlier today on a consult, and I told them that they have programs that they run. And what these programs do is when these programs get certain data points, what they do is they either buy into the market, they sell out the market. And they do it very, very aggressively. So if you get caught on the wrong side of the program, you're just going to be in a lot of trouble, right? Because that's what these programs are designed to do. So what we saw today was a program, right? And what the program does is it either buys or sells very, very aggressively, right? The program never just sits back and looks at the market. And so what they do is a lot of times they key these programs off what people say. I think if Trump wins the election, they're going to create programs off what he says. I remember when people looked at let me sidetrack it real quick. I don't want to get off track, but I want you to understand something. I watched that National Association of Black Journalists meeting. I watched it because it was easy to watch. It was only 35 minutes. They wasn't even up there that long. So I'm in the gym on a treadmill, getting my little laps in, and I'm listening to it. And one thing he said that people aren't going to get because they're not looking at the market is between all that yelling and screaming and, whatever, right? That performance that they're putting on. He said that even though he likes Elon Musk, he doesn't believe that most people should own an EV. That's going to go over a lot of people's heads, but it's not going to go past me, right? So I'm looking for stuff like that to try to kind of understand where do I think the market is going based by people that have the ability to direct policy and then other things. But they have algos out here in the market crawling the internet, right? And what they do is that they look for particular points, and then based on those particular points, they try to either sell or buy the market. So what I want you to understand is that what we're looking at is that people believe that there's going to be a recession, right? And so that's what they're selling to us, that they believe. And because they believe that, they're worried about future earnings in the market, right? And to me, this didn't start today. This started yesterday, because we saw that the market was good early on, and then the second half of the day, it did really, really bad, right? Well, it didn't do great. And so to me, what they're worried about is that if we're going into a recession because of higher unemployment, it's going to impact people's earnings, because the majority of people in the market, they kind of live off what consumers buy. So we need consumer spending to be very healthy for us to continue to drive revenues, for us to continue to guide into the future. And so if we believe that the unemployment rate is going to tick up, that can impact people's ability to do that. But another thing about the unemployment rate is that if people perceive that unemployment is going to be high, it can put them in a position to where they now start to contract their buying ability, right? And so what I want you to kind of understand is that, in my opinion, the market is trying to price in the fact that they believe that they believe that the consumer is going to be a lot weaker in the future. And so as a result, people are not going to be able to buy what they think they're going to be able to buy, right? And that's what we're seeing with this big up in unemployment. And so now, how does that impact what you got going on? What I want you to understand is that, and I was talking to Miss Phoenix 91 about this like 2-3 weeks ago, is that the downside of the market is essentially insurance policies, right? Upside to me is also insurance policies, but the downside of the market is also insurance policies. And so if the market is pricing in that future earnings are going to be worse off because the consumer is going to be harmed because more people are going to be unemployed, what they're going to start doing is looking to buy insurance, right? Now, when do you want to be selling insurance? The way I operate, I want to be selling insurance, right? I'm sorry, let me ask myself this question. When do you want to have insurance to sell to people? I want to have insurance to sell to people before people need it, right? So let me rephrase that. I want to have insurance to sell to people. I want to have the ability to sell people insurance before they know that they need it. What I don't want to do is go into a volatile market and look to buy insurance and then try to turn right back around and sell insurance, because what I need is the market to get even worse, right? So what I want you to look at is that the VIX has gone up today. Like the VIX spiked really, really high, right? Now the VIX was going up yesterday. The VIX spiked relatively high. This is the highest the VIX has been in a very, very long time. So as a result, if the VIX continues to stay high, what you'll probably see is put premiums start to go up. Now, why did I exit out of all my puts today? Because my put premiums went up. My put premiums went up, and the price movement didn't really go up on a lot of my contracts. So what I saw on a lot of the contracts that I was in is that the price movement of the ticker really didn't move that much, but the premiums really, really went up because the VIX really went up because people got a lot of anxiety in the market right now. So what I would discourage anybody to do, and what I would not look to do, unless you're very, very savvy around what you're trading, I wouldn't look to buy puts right now. Why wouldn't I look to buy puts right now? Because what you could be doing is buying puts in a high volatile market. If Monday, Tuesday, Wednesday, all this anxiety and fear comes out of the market, what happened is that you will get a lot of you get a lot of premium degradation or a lot of premium compression because you bought in high volatility. What I want to encourage you to do is to be positioned to where when the market gets volatile, you already have the contracts to sell back into the market. So that's what I did this morning. And I'm not trying to say that to brag. I'm just trying to give you an understanding. I was already sitting on puts on tickers like Crowd. I was sitting on puts on tickers like Tesla. I bought one because I really understood what people like Chastity Sandage teach. I did buy a SPY put early this morning, and I exited out of that SPY put, I want to say before 12 o'clock, right? And I had to call that one in because I had unsettled funds in my account to where I had to literally call the broker to make him exit out of the SPY put, right? Because I didn't want to get my account banned. So I did do that because I got with Chaz and she kind of taught me how to play the SPY on the intraday level. So I bought a SPY put early this morning when the market opened, and then I exited out of that put before 12 o'clock. But every other put I had, I already possessed the put before the market opened, right? So I look to sell those contracts back to people looking to get insurance now, right? And then I'm very hesitant to buy something unless I really, really understand the situation, because now that we're in a high volatile environment, the cost of insurance is going to go up. So I was telling somebody about the state of Florida. Homeowners insurance is very high in the state of Florida because they already anticipate the fact that you're going to get a hurricane, right? So you're buying in a market to where they've already baked into your particular contract that the hurricane is going to hit your house. You want to get homeowners insurance in Florida when they don't believe that, even though we know they can change their premiums anytime they want to, right? So that's what I want you to understand. Right now, this is the best time to sell insurance to scare people. So if I'm sitting on a large portfolio of stocks, right, what I want to do is I want to look to sell that premium back into the market based on what they're looking for, right? And so what you're going to see, that especially if this volatility stays high, is we're going to see people look to try to sell insurance. People are going to be looking to buy insurance because they're going to be worried about their portfolio. What a lot of people are going to get trapped is that they're always looking for the market to sell off. They're wrong 95% of the time. And so now they're going to come out and say, well, I told you the market's getting ready to crash. But those people are wrong 95% of the time. So what I'm looking for is this to extend into Monday, Tuesday, Wednesday, Thursday. I think the market will adjust to this relatively quickly because the market normally does adjust to things relatively quickly. I just think the spike in the insurance number I think the spike in the unemployment number threw people off, right? So that's all I'm looking at. So what I really want to get people to understand is that what I want to try to help you do is understand and be able to forecast where the market is going before it even gets there. Right? That's the real skill you want to have, because this is the issue. Until you get access to a lot of information before people know about it. And I was talking to Miss Phoenix 91 about Moderna and how Moderna reported this week and they gapped down really, really bad. But we saw people jump into puts for 2025 in Moderna. They were $30 and $40 out of the money when they started accumulating those puts. When Moderna reported those puts was in the money, is because those people knew that Moderna was going to report weak. Right? So you have people in this market where they have access to information before everybody else gets it. That's just, and you can see this a lot of times on option chains. And so that's something that Mr. Stone was talking about. But I see a lot of times on option chains. And also, if you really look at the futures market, and I don't mean look at it from a historical standpoint, if you're actually in the futures market, you'll see people positioning themselves for things before they ever happen. Is because why? They know what's getting ready to happen. They got inside information, right? But one of the things that you can do, because you may not get access to that inside information, is understand how to forecast properly, right? And by forecasting properly, you can position yourself to be in position when things happen. You're already in position. So it's just like buying real estate in a distressed neighborhood because you believe the neighborhood's getting ready to move up. Then once the neighborhood starts to move up because it goes to that life cycle, you're already in possession of the real estate. As opposed to what most people are going to do is they wait for the real estate to hit an all-time high, then they try to come in and buy it. Well, you buying at the top of the market, right? So I don't want to buy put contracts when contracts are most expensive. That's what most people looked about puts, right? Because for some reason, with all their analysis, they're terrible at forecasting, right? With all the indicators in their charts, they can't forecast to save their life. So they wait for it to happen, and then they look to move. What I want to try to help you get an understanding is that learn how to forecast something to where you're already in position when it takes place, right? Then what you can do is get your position, accumulate, and then when the market moves to you, you're already in position to hold it. So there's a really good movie before we get ready to close out, because I don't want to be here too long. If you watch, I forgot what to call it, The Big Short, and the guy was trying to sell them the credit default swaps. He was telling them that the numbers are already here. If they go here, the market's going to collapse. You should look to buy these credit default swaps right now, because when the market gets ready to collapse, everybody's going to be looking to buy credit default swaps and you're going to own them, right? So then that's when the marks on credit default swaps are going to go really high, because everybody's going to be looking to buy that insurance against their portfolio, right? So one of the reasons why I've been able to make a lot of money off put contracts is because I've been able to forecast before something happens that I believe that this particular stock is going to sell off for whatever reason. And I look to accumulate the put contracts ahead of time, right? I don't mean there's not a market there. is, I mean, before the normal story is out, I'm looking to accumulate the put contracts. Now, I'm not one of those people that are talking about the market's going to fall every 3 days. I don't really don't do that, because even with today and even with this week, the market is still way up on the year, right? So the market is still way up on the year, and the market is also designed to expand over time, right? But on individual tickers, I've been able to get a lot of money out of the market by getting in position before everybody else realizes that this is no longer a good deal, and I already got my position, right? And so that's something I want to encourage you to start asking yourself how to do that. You can look at things like SWOT analysis. You can understand what the macro's doing, but learn how to create your own analysis on the market. So when you have days like this, you can just get out of your positions. And then as the market starts to rebound, if you still have that same narrative on that company, you can go right back into those positions again. Because as this VIX starts to go down, the premiums on the contracts will start to go back down again. If you still have the same narrative, like I don't believe that Tesla after the robo-taxi day is going to really do that well, you can accumulate another position and wait for it to fall off again. So that's all I'm going to talk about. Not going to be here too long. I'm going to go through these super chats and we're going to get up on out of here. So Ori, man, I talked about it. Appreciate it. Ray Gun, man, what's up with it, man? Appreciate the $2 super chat. Appreciate you coming through as a mod. So Miss Phoenix 91, appreciate the $10 super chat. No more donations to the market. Miss James, appreciate the $5 super chat, and also appreciate you contributed to the Venezuela post I put up yesterday. So I really appreciate your reply back to it. Okay, so Mr. Amika, appreciate the $5 super chat. So if anybody got any questions, anything, while I read these particular super chats, and I'm getting ready to get out of here because I got some stuff I got to do before the afternoon is over. So Miss Phoenix, what's up with it? Mr. Preston, what's going on? David, what's up with it? Julian Brown, what's going on? Miss Dukes, what's going on? Miss Brandy, ACC Tax, what's going on with you? I got a question I need to ask you. I'm going to reach out to you through your website. I got something I need to talk to you about from a tax standpoint. So Mr. Wilson, I know a professional trader who gets up at 4 a.m. to look at the market. I feel you. Yeah, I get up relatively early just to see what was up. So Andre Stone says the market was down 70 points before the data came out. So Mr. Stone, I would believe that's the data came out to us, right? So I always believe that savvy people in the market, they know the data before we do, right? So before the data came to us, you know what I'm saying, it was already down because I believe that they had that data early. I don't believe that the whole market gets the data at the same time. I do not believe that. So when they drop data to us, I never believe that everybody gets the data at the same time, right? I see too much stuff happening in the market to make me believe that there is it's a certain word around information, where information is efficient or information gets to everybody at the same time. I do not believe that. I see too much movement. I see people buying massive calls on companies, and then 2 days later they get a buyout offer, right? I saw with Coinbase before they had that situation to where I think the SEC said it was going after Coinbase. I saw people buying massive weekly puts on Coinbase. This was on a Monday. Then the Tuesday, the news comes out that the SEC is getting ready to, investigate Coinbase for whatever. I see this too much in the market. So I always feel like a lot of times the movement takes place before it gets released to the public. Lance, who's in my VIP course, she talked about how before the news came out about COVID, you could actually see on the charts by the way in which people were closing out their positions the week before the pandemic news kind of came out, that people already knew about the pandemic. And then we found out later that all of the politicians had been briefed on the pandemic. They closed out their positions. They sold their positions, right, without telling us. And then a few weeks later, all of a sudden, they started talking about the pandemic like it was the first time they heard it. They had already been briefed on it. So I don't believe for a second that everybody in the market gets the news at the same time. I believe that certain people, they get news before everybody else. And for whatever reason, the feds just don't come after them like they will come after maybe me or you, right? Hotspot Casino, the economy is going to crash. They're going to bring in a new currency by hook and crook. I feel so. Mr. Hotspot Casino, how do you make money off of that if the economy is going to crash, right? So that's the question I want to ask you. Since you're confident that the economy is going to crash, how do you take advantage of the situation financially, right? Because a lot of people tell you the market's going to crash, and I just don't understand like how they get paid off of that, unless they do like Mr. Reventure Consulting and do like a YouTube channel talking about the real estate market's going to crash, right? But unless they do that, how they get paid off of it. So what I want to really encourage you to do is put some paper behind your convictions. If you believe the market is going to crash, man, just short the market. Like I would take every dollar I have and short the market. And then when the market crashes, you'll cash out. You know what I'm saying? That's how you can get paid off the market crashing. If you just believe it's really going to happen, I would take a loan out and short the market. You can get a loan from Discover, right? They give you like $10,000. You pay them back like $200 a month, right? And I would take that 10,000, I would short the market, and I would just sit back and wait for it to crash, and then you'll come up. You'll take that 10,000, maybe turn it to $500,000. Then you can like move the belly and just kick back. What's going on to Dr. Chaz? So Dr. Chaz says consumers are getting smarter to not be poor. I feel you. So Dr. Chaz says, I told the group the premiums were so high they could sit it out. Yeah, the premiums are spiking up, right? They are spiking up. So I would encourage people, if you're looking at an individual ticker, make sure you know what you're trading, because what you don't want to do is on Monday, the VIX goes back down and then you get premium crush, which can happen. Taylor D says, do you think we'll recover for end of year? Taylor, look at so let me show you something real quick. How do you mean by recover? So let's go to the SPY. We're down 2% today. $12, that's a lot. I should have bought puts yesterday. Okay, so we still are not under 520. We're not under 525. So for me, I want to see us take out all these highs. Take out this high, right? Take out this high, and then get either at or under this low, because we're not even at the 200-day moving average, right? And we was at all-time highs in the history of the SPY. So when we recover for end of the year, recover. I mean, what do you mean recover? We're not doing bad. It's just a bad week, right? But on the year, we're up. This is November 2023, right? We was at 418, 410 in November 2023, right? We're at 530 right now. You know, I don't really see nothing to be worried about. That's just me personally. But if I believe that if my prognosis or my assessment of the market was that bearish, I would short the whole market, right? I would do a David Ackman and short the whole market. Just unlike David Ackman, I can't get on TV and tell you about it. But I would just do a David Ackman and short the whole market with whatever money I had, if I really believed that the market was going to go down and continue to go down. I don't believe that, and I won't believe it until I see these particular support levels get taken out, right? And that's another thing I learned from Chastity. I got my levels up. Until I see my levels get taken out, I'm not really tripping. I'll make money on the downside on the way down, but I need to see my levels get taken out first. But that's a great question, though, because I think a lot of people are going to have that question. So, yeah, I think we'll recover before the end of the year. I think we go in the fourth quarter, because I didn't see guidance this quarter be bad, but they may feel like, well, because the unemployment number just popped, it won't impact current guidance. Let's see how it plays out. Apple had a decent earnings yesterday. So Alexander Wilson says, I think the initial jobless claims yesterday is what started the sell-off. I feel you. So Taylor says, recover as in get back to 565 and keep going up from there. My mistake for being vague. Yeah, I believe the market's going to keep going up. But let's see how it goes. I could be 100% incorrect. And if it is, I'll play it off that. But let me tell you something about me, Taylor D. I always have puts in my account, right? My account never has, I forgot what this particular term is. My account's never to one side. So the last time I had pretty much just all puts in my account was 2022. Right? That's the only time. So I always, no matter how bullish the market is, I'm always going to have some kind of puts in my account. And then if I'm really, really bearish on something, I'm always going to have some calls somewhere. They may be way, way out of the money calls, right? Just in case the market just goes crazy. So I don't see the market being under a lot of stress right now because of how high that we've been all year, right? So 565 was where we were at. Can the market get back up there? Yeah, I mean, we're just in August right now. We got 4 more months. We still got the fourth quarter. Even if it doesn't, I think we get back there in 2025, right? Because I think once we get a new president, everybody starts to focus on that. Unless there's something like a war or something like that, I don't see, or maybe energy costs go up. I don't see it. But the money's made on the internet by telling everybody the market's going to crash. None of those people are shorting the market. They're not shorting the market. They just talking. Because to me, if you really believe that, short the whole market and come up. Like I run a lot of puts. I just don't tell people that companies are trash, right? If I believe a company's trash, I'm gonna run puts on them. I'm not gonna just tell you about it. So to me, if they really believe that the market's gonna crash, I would tell them to run puts on it. Just like people that think the dollar's gonna collapse, I tell them to sell me all their dollars at 10 cents on the dollar, and I never hear from them again, right? Because they don't really believe that. Because if they believe that the dollar has no value, I believe you what you're saying. Sell me all your dollars on 10 cents on the dollar, right? Because it has no value, and you never hear from those people again because they don't really believe that. They just talking. So it is what it is. You know, this is the internet. So appreciate everybody for coming through. Want to really encourage everybody to make sure that they manage their risk. Terrence, man, appreciate the $4.99 super chat. Hotspot Casino. I want to really encourage you, man, to, you know, kind of get a grip, bro. You know, it's Friday. We're getting ready to go into the weekend, man. Just relax, baby. And I want to encourage all of y'all to have a good weekend. Put yourself in the best position to be successful. And talk to y'all later.